let's use this part of the range up here, not that. I think that's what I was intending to do from the start anyways. Okay, so let's delete this one here. Actually, you know what we can do? This is where it should go. So there should be something in here. So we should kind of define some targets below. This range is kind of already tested there. So you'd be more, yeah, that's tested here. Base of the move right here, 91.58. And then you'd be down here lower at 90.89. And then even down here lower. So we can define kind of the two expectations here. So and we're just going to do 30-minute charts here. That's fine. That's I remember this is a pretty important level here. 90.13 is fine as well. There's let's make sure, let's check the hourly. So probably more likely the hourly here at 90.31, but we also had 90.13 there, which is fine. So anyways, we're going to do this with some trends now. So this move, let's talk about it for a second. You've come and you've tested this part of the range right here. So it's 93.71. You've tested it off of this right here. So you have tested this part of the range. If you're going to go up, it's going to go and test the second part of that range. But really right now, it looks like potentially creating a base on a larger time frame, right? So you kind of have the top and bottom of your move here. That's been hit on that side. That's been hit on this side. You'd have your trend like so, holding the move up. And this simply just looks like it's going to go and hit the next part of its range. It's kind of in this moment where it's laddering up. It's not, it's deep diving this level a second time. You can see it's respected it there. It's deep diving it, possibly breaking the move. Now you have this. Your target wasn't really hit, right? But then you have this as a hold level right here. Your target could possibly be somewhere up there. This is kind of confirming, if this continues to hold, that the move is going down, right? And it doesn't continue to hold. It actually breaks up. So that's quite simple. This now just moves to here, right? Never gets hit. Wonder if it comes back up and hits it. Never gets hit. So herein lies a problem, okay? Let's delete some of this noise off the chart. Let's delete this level. Let's delete this level. Herein lies a problem, because this is where entry should have been, right? So this is that same problem where you're risk assessing a move, and this is where it should have gone. Keywords should have, and then even we can probably go to a 1 minute chart and see where this trail exists and say, yeah, okay, fine. There's the 15. It could possibly, that can't really go to there, can't really go to there, can't really go to there. So it actually doesn't really have a spot it can go to. It can go to here, but then breaks up over that and starts hard closing. So you're kind of creating this problem already, right? Because you're hard closing this level. So even if you did short there, you'd likely be getting out when you start seeing it pushing over that, right? So we can actually just rewind this back to the 15-minute level where it should have gone, and we can kind of work time frames down here, because that should have been an entry. And then you're sitting there saying, oh man, this thing, it just never hit my target, never went after where it was supposed to. Here's the 5-minute level right here, right? So this is kind of that same thing as that hourly. So we have two time frames here, okay? We have the 15-minute here, which is kind of where it should have gone. It should have laddered off this. And then we have a 5-minute that's actually holding the move. Just like before, when we looked at the charts below, where we had the 1 minute where it should have gone to that 1 minute, but then it hits that hourly on the bottom side in the first example and continues to hold that and gives you entry off of that point, right? So we're going to go and do this one here. And there's that 5-minute level. Hits it, it's holding the level, breaking through trend, fine. Is there any other points of entry? Not on the 3-minute. What about on the 1 minute? Well, it would happen after this, right? So your point of entry would be here, right? So this is, very, very common, and it gives you a few entry points prior to losing the trend. And then so you're looking at this trade and you're saying, well, yeah, it should have went up here. This is always where we buy. But now you have to assess the risk on it differently. You have to go and find the other time frame. Sometimes these moves, and this actually happens frequently. I'm going to say sometimes, because sometimes they go after a higher range, and sometimes they dynamically are adjusted in the moment to find where the hold level is holding it is on a different time frame that you're not looking at, because we can't always look at the 1 minute and then seeing where the greediest point of that is. So it's almost like this. If you were to have a 1 minute level right here, and we're going to do it like this, we're going to kind of just use the pen and draw it. If your 1 minute level exists right here, this is this 1 minute right here, okay? And then that doesn't get hit. There is going to be a larger time frame that has stopped that move, and it itself is going to have a 1 minute level that's going to hold this move. So it in itself is going to have its own 1 minute hold level. So it will never actually go after the true greediest part of the range. but it may go after the greediest part of the range that gets respected, right? So this is assessing risk on a move where you're saying, okay, well, I didn't quite get into this move when it was the perfect entry up here. Maybe this is perfect entry or this is perfect entry, but this also in a way reduces risk because you're confirming a larger time frame hold and it's going to have its own greediest point. So the greediest point of the range doesn't get hit, but then a higher time frame piece of that range holds the move down, and it in itself has like a pseudo greedy level. So it's not the greediest part of the move, but it's the greediest part of the range that gets held. And again, this is assessing risk in the move and understanding that we don't always go after the greediest level. Sometimes we go after something else. And then also within this trade, you have something else happening, which is another part of risk assessing a move, right? You have this trend has been respected, right? So let's go and find where that trend gets created. It's not a 4 hour, so we can see it's not a 4 hour. Where's Mr. Trend here? It's not a 1 hour. Well, possibly could be a 1 hour, but we're gonna find where it actually exists. Would have been created prior to that. Aha, it's the 15 minutes. You see, you have the 15-minute, which is fair because you know what, this would have gotten created on the smaller time frames first. So maybe you had this trend here was the 1 minute, and then something like this would have been the 1 minute that breaks, and then that gives you the 3 minute right here, and that breaks, and then that gives you the 5 minute here, and then that breaks, and then this gives you the 15. So that's fine. That's exactly what it would be. And then you'd have the hourly piece right here. And then when that breaks, you'd be moving down to the range again, and so the next piece of your story would be told. So we talked about the levels, risk assessing a move based on trends now. Okay, so this is the next part where you're going to be looking at a move and saying, okay, well, that's fine. We see the levels, so we're going to leave those two there. We're going to make this a different color because it's a little confusing that they're all gray. So this is a larger time frame. This will be the 15 minute is gray as we're using gray, and this will propose to be the hourly, which it should indeed be the hourly here. We're just going to go verify that. So that's fine. It's right there in the move. So well, it's actually right here. It's actually right there in the move, and then there's an early sign of it breaking right here, right? So that's where the trend is really holding to break. This is the actual trend, which is fine. So you can use either or. Difference of preference here of which trend you want to see, early entry on something or more accuracy, right? Just the difference of trend and how it gets created. This is kind of the final piece of the move down. So you can use this on a smaller time frame, or you can use a larger piece there, which is the more relevant part of it. So now we're going to go to this trade, and we're going to go back to right here. So this is the next part of this that you could assess this move, okay? So there is going to be a level that needs to get tested if this trend breaks, right? So you can see this one's already tested here. So let's go and do this in group pink. What's our expected point? So pink is going to be kind of the expected hold level to be hit. Well, that's already hit there. So, and if you break this trend here, you would have already technically tested this because you'll be breaking trend, and you already have been testing through that. So that's it. That's it. There's nothing there. You have something here, and you have something here. We're only going to use the 15 minute and nothing higher because quite simply there isn't enough time to. Maybe back here the hourly might be enough. No, there's simply nothing there. The hourly would be down here. It's already kind of marred and not used. You could go to the 4 hour and there's nothing on the 4 hour there. So now you're going and breaking back down smaller time frames, right? So now you're, we got a clean 15 minute there, and then the greediest part there. And then you'd have a 1 minute level in here somewhere as well. So you would have this as kind of the base of the move that's already being established. So likely you're going to deep dive this as the second touch, right? So this is already kind of hold levels hit, deep dive this to create the base, right? If indeed that base holds, which could possibly hold off of something even greedier down here. Okay, we'll go find that one too. So you kind of have an expected level down here, right? So greediest point would exist right here, 91.39. Okay, that's good. You could also have 91.50. So just keep a mental note of 91.50. We're going to go back to the 15 minute here. Come on. Expected 91.50 is another expected. So we're just going to mark something that's close to 91.50. I think it was 91.53. We have something 91.51. That's pretty close. So we can use this. More so 91.38 looks like the greediest part of this move, and that's fine. So you're in this trade. This is kind of what's going to go when this trend breaks. So if this trend starts breaking, you have to start thinking, okay, where can you take entry? Well, the entry is actually shown to you on this hold level. So if you wouldn't have had this yet, this doesn't exist yet. So we can kind of just make this one a dotted line for now because it's not in existence yet. So what can be in existence? Well, you can hit this 5 minute hold level, right? So if you do indeed hit this, you know you're breaking trend. So you now have an entry based on trend. Aha, you do hit that level. So you'd have two kind of entries here. You have this trend that was created on the 15 minute, right? So like this, now adapting to the 5 minute, which is right here, right? Giving you your next trend right here, kind of this arraying point right here like this. So you have an entry on this 1 minute or on this trend break, okay? You take entry there, that's fine. You break trend there, that can also be entry. At that point, you'd likely want to enter the hold level, which was right here, which actually was hit. This would then give you your 3 minute trend once this is done. So then this actually just adapts down to the 3 minute, right? Just kind of like the trend arraying that we do, adapts down to this 3 minute right here, which is the same as this right here, but that's fine. That adapts to the 3 minute there. You could have got entry back there. Let's say you missed all these entries. There's the loss of the 3 minute. So now you'd be on the 1 minute. The second this is lost, the move is done, right? So and it's lost there, and the move is done, right? Like the move is done. You have a final entry right here, and that's it. So this is a part of assessing risk on a trend and how we use the trend to see where it's going next, right? When you actually look at this move, you were given multiple entries on all of these, and the first one actually happened on this trend right here. So the loss of this trend, the loss of this very first trend showed you that this move is okay. It's starting to be done and complete, unless for some reason it can hold this here. But again, this is already tested. It's laddered to here. It's laddered to here. You know, this 1 minute right here was already done. The move is as clear as day. So you have different entries based on these trends breaking, but they're not necessarily the greediest hold levels, but they are adaptive information in the moment. So it's about assessing the risk of the entire move here. So it's about assessing the risk of the trend, right? So you have your 15-minute trend, which is supporting the entirety of this range push. It adapts out to the 5 minute. Once it breaks, it adapts to the 3, it adapts to the 1, eventually gives you the final breaking point of the move. You also have the greediest points of the hold levels, which are giving you, you've got a stronger time frame hold. You didn't necessarily go after the greediest part of the move. Just like we might not go after the greediest part of the move down here. I'm not sure. But we have two expectations. If we were to go after the greediest, it would be 91.38 and it would be a great trade. But it may not get there. It may deep dive this 91, this hourly level. I believe this is an hourly level. It may just deep dive this to 91.51. I don't know. Or it may ladder off of this. We don't know that yet. We can't see because we've got other trends and things in the way, right? So a part of understanding, again, chart architecture is knowing that, as I've said this whole time, one step at a time, right? We can only see one move into the future for these reasons, because you have to undo all the work you did to get there, right? So see where this thing goes. Okay, so it goes to the hold level. Yeah, pretty perfect actually. It front runs us by what? It went $4, which is fine. 91.98, 92.02. That's at 9,200. It's a psychological level that people would stack, and that's fine. And then that's why we buy a few dollars over psychological levels, because this is common. So you would have had, picture perfect entry on here. This actually hits 9,200 on the dot. So, it would have been 92.0101 or something like that, or 9,280 cents or something. Either way, we would have gotten filled there, and it would have been perfect entry. And this gives you your hourly trend, right? And so this gives you your hourly trend, which, eventually, as we know, breaks down here. And this is that same moment where this hourly trend is breaking to deep dive the next level. So there could be another entry here if you're not at a trade, and that would be on the smaller time frames again, right? You'd do the same thing where you're working down 5 minute, 3 minute, 1 minute. Eventually you'd break a 1 minute trend and you would have entry there. So let's do that. 15 minute. Actually, technically this should be here, which gives you, that's the hourly. We have to start on the right time frame. That's the first thing we need to do. So, which is, that gives you this to this on the 15. That's the only thing that's developed. I don't think there's a call to develop anything larger here, not yet in this move, which then we are going to adapt to the 5 minute, which that 5 minute goes to here. So that base point can go here like this. And that base point can go there like that, which would give you the 3 minute, which is that part of the move right there, right? So you'd be losing, like you could see where the trend is lost there off the hold level. So you could enter this trend, you could adapt this to the 3 minute, which would be right here, and then it would have its final 1 minute, which would be the next one right down here. But then again, you wait too long for these trends to adapt out like this. Fine, there's still entry on them. That's perfectly fine. So even if you entered on the 1 minute, where's the entry? The backside touch of the level. That's fine. So that's that right there. It does hit it perfectly fine. Backside touch of the level. It's lost its 1 minute chart from back here, how you've adapted and rated out. And so let's see where this thing goes. It actually hits 91.51. Good. So if you waited to the last entry here, you still made 70%, right? It's perfect, right? It's actually perfect. And does it finish there or does it keep going down? Let's see. It needs to hold this level down here. Maybe we can go to a 5-minute chart here. No, it hit that level pretty perfectly. Oh, okay, there we go. It actually does break down. It breaks down to 91.31, 91.15. Didn't we have a level at 91.13 somewhere? I'm sure we did. I think that was a bigger time frame, right? That was a bigger time frame pull from back here. Maybe it's a 4-hour, I want to say, or a daily. I'm going off of memory, so no, it's not a 4-hour, which means it's not a daily there either. Yeah, the daily is here, and that's fine. So there's some other level. I remember looking at this. There's some other level that's in here. There's a backside here. No, part of this move here. That was the base. It deep dove the base. I'm not sure right now. I could spend some time looking for this, I suppose, but right here, 91.13. Yeah, okay. So the backside of the level, and that's fine. I wouldn't even be convinced. I'd have to go back and look into this. I actually think it would be the base of the move right here. And that's the point where it deep dives to maybe base of the move. Actually, it just looks like it's a very small deep dive there. If even you would call that a deep dive. Yeah, I don't even know if I'd call that a deep dive. So the point being is that risk assessed trading is where you have to not just be buying hold levels, because hold levels are great. But again, then there's other criteria that your chart will go through, right? You'll have dynamic information that gets put down in the moment. You can maybe just delete all of this and even move up here through this trade. Like, where would you expect to enter here? Well, okay, let's take a look at this for a second. This was already tested, so it can't be there, right? Like this is already tested. So, it must be here. And you would even break this down now and say, well, there's going to be much better spots to enter, right? Like there's this right here. There's this right here. Maybe not that one because that range is tested, but what about this? Okay, so let's even continue to look for this. That's kind of tested. Kind of, not really, but kind of. So you'd have this right here, 91.87. Does it come down to 91.87? I don't know. Let's take a look. Well, it doesn't in this part of the move, that's for sure. So maybe 91.87. Yeah, it comes pretty close here. 91.89. There it is, 91.87. So it does hit that, and then it bleeds down further. So and even further, Jesus. Okay, good. So you're looking at this trade. What happens that you don't get entry here, right? So let's go back and take a look at this. This gets hit. Remember, now if this is holding and there's a level down in here somewhere, which presumably there must be if it's a $70 price difference here. Presumably there must be some level in there. But what's more important here is understanding what hold level could hold this move up. And so this 5-minute is holding the move up. So then you'd have this here, and that's not holding the move up either. It's actually the backside right here that's holding the move up. So your new entry would be here, right? Or actually perfectly right here. 92.10.22. What does this go to? 92.11.04. So less than $1. And at that point, your entry is not going to go much lower than something like this. Maybe it goes back down to test that level a second time. Yeah, it did. It did. Ooh, stop, stop, stop. But it didn't even test this. But presumably, your kind of perfect entry would be here because you can see where the move is holding. So if this is actually establishing that the move is holding here on a bigger time frame, you have to start adjusting your expectations and stop thinking it's going to. Oh yes, we're right here and we're just waiting to ladder down to this point right here. Because if a move continues to hold and continues to ladder, you're just never going to get back there, right? This might hit in the future, which it actually does, and then fine, this one gets hit in the future. I'm sure it does. Maybe on 1 minute here somewhere. Yeah, no, just this one right here, 91.71, and then this 91.87. But this never gets back tested, right? Like past this. So this is where you have to assess the risk in a move and say, okay, we're actually not going to these greediest points anymore. We're starting to just respect the move as is, and we need to adjust our expectations. So actually, here's a level right here. We just didn't do the right work in the time frame. So here's the level right here, 3 minute. Oh no, we did, and it never gets hit. Actually, the entry would have been this. So the 5 minute right here, and then possibly a 1 minute inside of there. 5 minute is there. So possibly this one right here. This would have been like your best entry. Yeah, and it's pretty close. It goes a little deeper, but that's part of the game when you're having to adjust dynamically. It's what is more notable is it's going to ladder off of this right here, right? Ladder here to here and so forth. And then the move just goes straight up, right? Just goes straight up to its moment. Here's another example of it, right? Here's the hold level that's holding the move. It does go after the greediest part of this move, right? So there's another example as to where, let's take a look at what was happening here. You've got 15, no good. 5 minute backside. Nothing there. 1 minute right here goes after that 1 minute. So what's holding it down next? This right here. What is this? Larger time frame. I think we actually looked at this. Nope. This is not the one we looked at. 3 minute. So presumably your next entry is here, right? Well, that's kind of straightforward because this actually does get respected. So this is not the same. My mistake. This is not the same because you know what? It does ladder off the greediest point. So you do have those greedy point ladders. Oh, there's one right there where you would expect it to go to this level here, right? This is already hit. That's already hit where you'd expect it to go to this level here. This is what holds the move, which means this is your next best entry, right? Which it is right there. Just speed this up a bit here. Don't need to kind of continuously look at that point right there. But you can see where that ended up being the best entry because it's continuing to hold that part of the move. So again, this is a part of understanding that our charts are dynamic. They can go after criteria that is less conventional, less standard. You don't always go after the greediest 1 minute level. So you need to be able to see when that's happening and developing a different time frame and then go after its greediest level. Or you need to look at your trends, right? Remove all this. Trend to trend right here. You need to look at your trends, see where they're breaking down on what time frames, and then understand. Let's do that one again. Yeah, that's right here. This one's right here, I believe. Yes. This one's right here. Oh, and we're current in the move. And trend is a different type of entry. It's a different type of adaptation and a different type of entry that you use by closing out trends. Stuff we've gone over in the past, right? Just using it in the moment and on the fly, right? And then so you'd be here like this to this to see if this move can continue to move up and likely going after the daily piece of the move here, right here. Likely going after that. But expectations, right? Like where's it actually going to go? Different story.